Good morning and good afternoon, depending on where you are in the world today. Welcome back to OAG's latest webinar. This is our second one of the day. Hopefully it won't be a straight like-for-like repeat, but obviously there will be those of you who didn't listen in this morning and are joining us from a different part of the world. So welcome. We're going to look this time at airline financial position. It's that time of year when airlines are reporting mostly their Q3 earnings, and there's some interesting stories that have emerged over the last few weeks as we see those rolling out about the state of the industry and how airlines are responding to the current market and how they fared through the summer. So we'll take you through some highlights of what we've heard from airlines so far, who's reporting profits and why, how are all of the factors that are going on right now externally impacting on airlines, and what's happening with capacity, and is that reflected in financial performance? What's really going on, and what does all of that mean for next year? That seems to be always our position looking forward to see, are we there yet? Are we recovered? Are things on the up? Hopefully we'll get some answers to that as we go. I am Deirdre Fulton. I'm a partner at Midas Aviation. I'm delighted to be back hosting. It's been a couple of months, but glad to be here this afternoon. And I'm delighted to be joined by John Grant, OAG's Chief Analyst, who I'm sure will give us opinion on a number of things, probably not limited to the agenda. John, isn't that right?
Probably about the England World Cup squad. That's probably more relevant, Deirdre. Do you know this is our 71st broadcast? It's amazing, isn't it, that we've got such longevity to be going for 71 of these. The listeners must be extremely brave.
Maybe our listeners can give us some feedback on that longevity or otherwise. Also
Could we
delighted this
retire
afternoon.
at 71?
Well, then maybe. This could be our swan song, John. Delighted also to be joined by two guest speakers this afternoon. We have got Sid Narkedi from Ishka, who's joined us before in a webinar and of course was here this morning. Welcome back, Sid. Looking forward to hearing from you again. And we've also got Thomas Jaeger joining us from CH Aviation. Thomas is joining us. We're hoping he doesn't freeze to death this afternoon. Unlike the UK, I think it's a little chilly in Switzerland this afternoon, but 10 out of 10 for an interesting background.
Thanks for having me.
Brilliant. Okay, well let's dive right in. So as usual, we try and bring you the latest capacity story in these webinars. Now it's looking likely, and we've been seeing this for a couple of months now, haven't we, John, that 2022 is going to end up somewhere between 80 to 85% of the 2019 position. We're definitely in a better place than we were last year in capacity terms, but we're still below that benchmark to 2019. And things, there's slow progression, isn't there? But I think it's fair to say that we're fairly static right now through this winter.
Yeah, I think so, Deirdre. We've obviously second week of the IATA winter season in the Northern Hemisphere. Capacity traditionally cuts back anyway, but we're about 91, 92 million seats per week, which is about 25% up on last year. So that's the positive, but still down against 2019. The positive messages continue with the fact it's a much more stable supply side than it has been for probably the last 2.5 years, with the notable exception of China, where continual lockdowns, last minute announcements, millions of people being trapped at home. It's really difficult for the Chinese airlines to plan what they're going to operate in 2 weeks' time. So at the moment, we see them every week. I see the data and it says, 30% more capacity in 2 weeks' time. And then 2 weeks later, it's back where it was 2 weeks earlier. There's just no end to this, and we can't see it changing in the near term. We have seen a few more international services and a bit more international capacity, heavily coordinated by the authorities from China. But yeah, it's the one area that we still need to get to grips with and find a solution. And zero COVID is I don't think going to be the solution. But who am I to argue with the Chinese premier, especially sitting in an office in East Grinstead? So
I think internationally, we're seeing that steady increase, aren't we, in capacity terms, not just in China, but elsewhere, helped, I guess, by Japan opening and capacity.
Yeah, absolutely. Japan has reopened, and speaking to the OAG office in Tokyo this morning, there's a noticeable increase in international visitors to Tokyo already. They're seeing clusters of French tourists on the underground and metro, which they find quite amusing, trying to find their way around. But we also got markets that are very positive compared to 2019. Central Asia is plus 25% on 3 years earlier. Upper Latin America, driven by Colombia, West Africa, which has been pretty strong in recent times. So there are pockets where we've gone over and above 2019 levels. All of those three markets, though, the regional markets, are quite small, though. So until we get North America, which is within 5% of 2019, Western Europe, and Northeast Asia, and principally China back, we're always going to struggle. And I think that now is beginning to cast doubt on, will we actually get back to 2019 levels in 2023? Certainly not going to see much movement before the end of March with the winter schedules. As we'll see later, there are all sorts of issues around additional supply into the market, not just resources in terms of people per se, but other issues that the industry needs to face. So yeah, it's going to be another interesting 5 months, but you know what? Every 5 months is interesting in this business, isn't it?
Absolutely. I think we probably at some point, maybe I'll take a look back on I can't remember where in the 70-odd presentation slide decks that it was, but I'm sure we made a prediction at some point that actually we wouldn't see recovery in the industry until 2024, potentially 2025. So I think that forecast is sort of bearing out, isn't it? Essentially. I'm delighted, Thomas, to hear that there's a barking dog. I'm assuming in your background, because there's a barking dog in my background as well. So no, don't apologise. You're in good company. Okay, so I guess that kind of position, Sid and Thomas, does that resonate with your sense of where the industry is and what's happening, that we're sort of cautiously creeping forward, but hampered, I guess, by the continued closure of China?
I mean, if I go first, I agree. I think that's a big positive, and I think we've seen even in Southeast Asia, which was affected by the pandemic for a longer period than other regions. Those countries are also seeing capacity and traffic returning. So certainly that's a common theme, and as we'll see going ahead, the impact of this on airline performance has been quite positive. And even the fact that some of these numbers could have been even higher had it not been for some of the supply side constraints that airlines have faced. So definitely.
And that's a real issue, Thomas, isn't it?
Well, I mean, I think it's also a real issue that is much bigger in Asia than elsewhere, because aircraft have been on the ground for a much longer time and also often in wrong locations. So if you look at how many aircraft were on the ground in Southeast Asia in a very very hot, very humid climate for a long time, and they haven't flown much. It takes a lot longer now to reactivate these aircraft and to get them back up and running again. And that's what I hear from the airlines in the region, that they're constantly talking about the lack of maintenance, repair, and overhaul capacity to bring aircraft back online. And that's what's hampering quite a bit of the recovery in these markets as well, where domestic markets have also recovered really fast, but they don't have enough aircraft to satisfy all of the demand. But I guess we'll see more of that later, that we see the lack of supply actually leading to pretty impressive yields that were maybe not even intentional.
Let's move on to our next slide and see a little bit more in that vein, I guess. So we took a look. We obviously have seen, as we talked about at the start, that we're going to look at some airline financial performance. What we wanted to do was just take a look at where the numbers were in relation to passenger volumes and revenue, because there's a narrative that's emerging about, passenger numbers are still not recovered, as we know, capacity is still not there, but revenues are improving. And we've got booking and revenue data here for August this summer versus August 19, and transatlantic market to pick an example. We've got traffic down 17%, but revenues up 10%. Similarly, in the domestic market, domestic passengers still down, but revenues are up by a higher factor, 21%. Japan's a little bit of a different story that doesn't sort of correlate nicely with the trend, but that's probably because there are other things going on in the Japanese domestic market. So, John, I think this is really interesting, isn't it? Is this are airlines using the kind of the capacity position, I guess, to help generate back some of the lost revenue? Is that what we're seeing? What's going on?
It's an accidental outcome of the supply chain issues, be they airport capacity, operating crew, whatever it happens to be. We've seen that pent up demand, and we knew that was going to be there. It came back really strongly, much stronger than I think any of us anticipated. Certainly the CEO of Heathrow, he clearly didn't anticipate a recovery in the market, and then blames the airlines for putting more capacity on. Don't quite understand what that's about. But generally, I mean, airlines have been quite fortuitous because they've not been able to put as much capacity back. Demand has been really strong. They've been able to pass through quite significant fuel surcharges, despite the fact that many of them had hedged, so they got some benefit from that activity as well. The strength of the dollar means it's been a very strong outbound market from the US. On the transatlantic, in summer 2022, we've not experienced as much low-cost long-haul capacity as we've previously seen. So there's been less disruption, and the principles of supply and demand have kicked in, and it was the peak leisure period. So, we'll discuss later, the absence of corporate demand wasn't so significant because we were seeing a lot of upselling and people moving up cabins. And occupying business classes, as families, and revenge spending and all of these sort of things that we've seen going on. So it all contributed to what was a really strong performance in the quarter. The questions then become, of course, what happens now? Airline CEOs have generally tried to avoid talking about the corporate recovery in this quarter and what their expectations are, rather talking up the bullish leisure demand that they expect to see at the end of November and into Christmas season, rather than talking about, the big conference corporate market that you normally see at this time of year. So it's going to be interesting to see how it rolls out, both in this quarter and in the first quarter of next year. And are we going to see enough discipline about capacity and production over the winter that allows us to enjoy these types of results in the next 2 quarters. That's going to be the challenge. You know, do we see good discipline and behavior, or do we see some people breaking ranks and trying to grab revenue rather than worry about yield?
Really tricky, isn't it? Because actually, you know, there has to be a shelf life on revenge spend or revenge travel, doesn't there? You know, there has to come a point where, and I don't think we're quite there yet. All the savings that people who were fortunate enough to be able to save during lockdown and put money aside for holidays and you know, additional disposable income type activity, that's going to wear off soon, isn't it? It's going to run out soon, that pot of money. And
what we need to see is a really orderly transition from that pent-up leisure revenge spend to a phasing back in of corporate demand, to almost swap seats with the leisure demand in those premium cabins. And that would be a perfectly ideal scenario for the industry, but I can tell you it's not going to happen. It never does. We've never been.
I think fear levels are just dampening that just now, though, aren't they? And that's
a little bit. I think they're also forcing people into what I see as the really big growth area for airlines, and particularly long-haul airlines, which is premium economy. You know, that little bit of differentiation you see, that extra 2 inches in seat pitch, slightly upgraded meal, whatever soft elements are attached to that product, and yet command a £400 or £500 additional airfare, are sweet news to airline CEOs. And we're seeing continued erosion and removal of first-class cabins. American have removed it on all of their transatlantic flights. So, you know, we're getting more and more focus on business cabins, and they're becoming smaller. And you know, let's not forget, you know, IAG and British Airways are just one example. They used to have 86 plus configured business class Boeing 747s, and they've replaced them with 777s with a much lower seating density in business class. So you know, they're going to be able to squeeze their business class yields a bit higher as well, and you've then got premium economy. So I think it's, if the airlines play the revenue management and they have a bit of luck with the way the cards fall, you know, they could maintain these types of yields throughout the winter. February might be a challenge, but going into 2023 peak season, we could be seeing these types of fares again. And if that is the case, you know, as soon as I finish this, I'm off to book my holiday and pay for my tickets now, because it's going to be very expensive in 2023.
I think it's very expensive right now, though, isn't it?
Well, I mean, yeah, I mean, certainly airfares are a lot higher than they have typically been for most city pairs that I look at. But I mean, I have a feeling that, you know, in 2019, there were also a lot of people being completely not rational with pricing and not disciplined with capacity, as John has said before. And in a sense, now the capacity discipline is kind of forced on them, because there is not too much they can do to get more capacity fast. But I am very worried that all of these curves that we have working against each other, this premium leisure demand dampening, people starting to spend less because they have recession fears, and the recovery of business travel, that not all of these curves are going to align the right way. And especially in winter, it's always, I mean, at CS Aviation, we always call it bankruptcy season, Q4. That's when most airlines are going out of business, if they are in trouble already. And I assume this winter is not going to be easy for a lot of carriers that maybe have been artificially kept alive because they got bailed out during the COVID period.
Good point. Sid, any thoughts from you on that particular point? I know we're going to talk in a bit more depth about that later on.
Yeah, no, I mean, it has been a factor of many things, and I mean, the term, the overused term of pent-up demand, that's obviously, as John mentioned, the revenge travel, because there's been so much of an appetite for travel, and that coinciding with the fact that there were so much constraints, that's a natural kind of supply-demand issue there. So, and secondly, I think airlines, because costs also have gone up so much, fuel prices 150, 160. I think it would have been frankly impossible to make any money if the fares wouldn't have been this, if the fares wouldn't have responded. So yeah, I mean, it's a factor of many things. Whether those factors continue going ahead, I mean, we'll discuss those in the upcoming slides. But yeah, there's many kind of unknowns around that.
So yeah, one to watch whether that capacity discipline is really going to be maintained. And as John intimated, you know, who might be first to break that. Just back to fares for a moment. Quite timely, Clive. Thanks for your comment about your Heathrow, Muscat Heathrow fare is up 78% this year compared to, I'm assuming it's 2019. It would be interesting. We posed this question this morning, and just as a very unscientific poll, please do share with us any examples that you have had of excessive fares, or fares that, you know, by comparison to what you paid in 2019, that have doubled, because I think it's an interesting topic. I think there's almost a sense for me in the cabin discussion that, you know, if premium economy is the future, are we really going to tempt back the business traveller, the corporate market, with fares that are probably comparable in the premium economy cabin to what they were pre-COVID in the business cabin? So the product might be good, but it's not the same. There's just a bit of a disconnect there, isn't there? You know, is the way forward the leisure travel might have disposable income?
You know, for those who are old enough,
do you really believe they will be disciplined enough that the fares will stay at these levels at which they are right now?
Yeah, Deirdre, we'll have some listeners who remember the good old days when what is now business class, in all its luxury, 25 years ago would have been considered state of the art first class. And premium economy as it is now is what at that point was the equivalent of business class as it was then offered. So, you know, all we're doing is going back in time, reinventing it, rebranding them, calling them slightly different products. And I would defy anyone to you know, really compare the premium economy product of Emirates, for example, to an economy product of 15 or 20 years ago. It's so much better. So I think maybe airlines are actually finally matching their product offering to the market need rather than pandering. I mean, what else, you know, what can you get in first class that you can't get in business class? You can only lay at 180 degrees. No one wants to lay at 185.
Fair point. Okay, having delayed us there, let's move on to our next slide, which is just a quick look at load factors for Q3. Pretty close to 2019 levels, and it's just illustrating, I guess, that point about traffic being closer matched to capacity than you know, than perhaps we've seen, reinforcing, I guess, the kind of capacity discipline point.
Yeah, by luck or by nature or whatever it is, we seem to have had a better alignment between supply and demand. And you know, if that is the case, then that's fine, and perhaps that just points to what we've really seen and what has been the real two different factors this year compared to 2019 have been that huge element of revenge spend / pent-up demand, and of course the fuel charge, which has been applied by many airlines.
Yeah. Okay. let's take a look then at some of these results. So what we're showing here are initially on this one, we've got the US majors Q3 results. We're showing operating income. So that's their income after operating expenses, but before interest and tax. And then a revenue per passenger comparison across the 3 quarters, 2019, 2021, 2022, accepting that 2020, nobody wants to go back and talk about that. Some interesting things, and certainly kind of confirms what we're saying about revenues, doesn't it?
Yeah, you'd expect American, Delta in the US and United in the US to be performing strongly, and they are. So, you know, that's no surprise. They were telling us very early on in the summer they expected Q3 to be their best ever quarter in terms of revenue. They didn't then say it would also be one of their worst in terms of cost, but that's another issue. But the one that strikes me more than anything else, or the two that strike me, is the JetBlue and the Spirit positions, which really, given that they're about to merge and you know they're going to become one entity, they're not exactly coming at this from a great position of strength, are they, compared to the others? And we know from a capacity perspective, they're both very big airlines in their own right, but it really doesn't move the needle in terms of their competitive position against the big 3 or 4 in the US. So I think that's a really fascinating merger, because unless they can drive huge cost savings and synergies and efficiencies, you know, they could just be burdening themselves with a problem that will need sorting out in subsequent years.
I guess what's interesting about that one is the US consolidation story. You know, this is a market which has continually seen consolidation and merger and refinement and improvement, and arguably that the maturity of that cycle is to some extent that, combined with a very big domestic market, it has helped the US carriers get through this. Are we going to see more consolidation in other parts of the world? Is that something that has to come? Is that the answer?
Potentially.
Well,
I mean, we've seen it a little bit in Asia, and there might be a bit of consolidation around TAP, Air Portugal, and what's going to happen to them. Which ownership stable do they fall into, if indeed they do, in 2023? Africa, there's always talk of consolidation, but nothing constructive or really super effective happens there. We've seen consolidation in Latin America, and there's always more that can be done. But I think, is consolidation really a way to play it, or is it just let airlines die on the vine and go out of business if that happens to be the case, rather than try and consolidate and keep someone flying that otherwise would be in trouble?
Thomas, you've got a view on this?
Well, I mean, I think we've spoken about discipline before, and if you look at the US market, US carriers have just been incredibly disciplined in comparison to Europeans, for example. If you look at if you'd have a graph that John would have prepared looking at the overall capacity of seats in the US over the last 20 years, you would see that there has been very little growth, in a sense, in comparison to other markets. And a lot of that is down to there having been that massive amount of consolidation to only 3 major carriers. And you can kind of play a game and look at airfares from Chattanooga to El Paso or whatever, and you'll see that it's essentially the same fare on American, Delta, and United pretty much whenever you look for that. So in a sense, they're doing price matches on all of these tier 2, tier 3 city pairs as well. So it's just it's a very mature market with a lot of discipline in comparison to other markets, a lot less fare wars, a lot less undisciplined capacity growth to try and get market share. And I think that's what's driving the fact that you had Delta being an investment grade airline pre-COVID, and why nothing like this has ever happened in Europe, because there is way too many airlines and way too many players. flying against each other.
It's interesting. One of the things we've seen and tracked through the pandemic is we know that low-cost airlines recover faster and put more capacity in and more fleet of foot, agile in what they're doing and their network planning. And Spirit have got 30% more capacity than they had in 2019, and Frontier has a lot more capacity. And Frontier's now started to move into places like Dallas, Fort Worth, with quite a sizable operation and recruiting staff and building a bit of a base there. And that's happening in 1 or 2 places in the US. And you wonder whether the big 3 airlines will look at this as just a minor irritant, or will actually at some point take action to reduce that competitive threat. And if they do that, then the only way they're really going to do it is on price, and maybe a bit more frequency on those markets. So we could see a bit of capacity indiscipline from the US majors if they can find that capacity, and resources are a challenge to do that. But for the first time in many years, I think, and to Thomas's point, we actually have a bit of an unsettling position occurring in the US domestic market. Whether it will really spook the big 3 or 4 is yet to be seen.
And they hold their nerve, or will competitive response be the trigger to unwinding the capacity discipline? Interesting. Let's move back to Europe if we can. Sid, sorry, did you want to come in?
Yeah, no, just to quickly add to that, I think one of the other trends we're seeing is full service carriers increasingly partnering or doing JVs with LCCs. So we've seen American taking stake in GOL, Emirates closely partnering with Fly Dubai, Etihad's doing it with Air Arabia. Avianca, obviously, there's still the talk of partnering with Sky, and there's a lot of consolidation, but that's a common theme that also emerges, that full service carriers trying to something which the European majors have done successfully.
Although from looking at the financial results for the European majors for Q3, there's a different story, isn't there, in terms of LCCs, and particularly Ryanair are certainly reporting very strong performance.
Yeah, Ryanair have done really well. They were quicker back into the game than anyone else. They've got more capacity. I think they're 15% up this week on same week 2019. They've got their cost under control. They were quicker and smarter than many others. But I think we shouldn't really panic about what we're seeing here, because this is a snapshot of a moment in time, and Europe is about 6 months behind the US market recovery. We were looking enviously from Europe at the US domestic market, saying how strong it was, and the international recovery has been very, very strong across the Atlantic this summer. And Europe, partly because of the strength of the dollar, has not been as strong. But it's all about timing, and the European markets are going to come back, and Asia is, with maybe a couple of exceptions, Singapore Airlines being one of them, perhaps 6 to 9 months behind where Europe is. So it's about moments in time on the recovery journey and where we are. The problem for the European airlines is that at this moment in time, being 6 months behind means that the US carriers and the US majors have had a summer of good performance, whereas the Europeans had a reasonable summer of performance, and now we head into the winter and the cash reserves have not been built up, particularly in some of the smaller carriers. And you wonder, I know Thomas has got some thoughts about how some of those smaller European carriers are going to survive, and will they have enough cash to survive this winter period?
Yeah, I mean that's definitely something that I'm concerned about. But I mean, as I said before, it's a season of relatively low cash flow right now, where in November and December you don't typically get that many advance bookings that you typically get. And I was on our newsfeed earlier today, and 3 of the most read stories this week were all about Flyr in Norway and their financing issues that they have right now, where they publicly essentially have to publicly speak about their financing issues because they're stock market listed. But as I said before, I think in Europe there is way too many airlines. There's a lot of airlines that were kept alive by government help during the pandemic, and 2 of them that got a bailout, Blue Air in Romania and Blue Panorama in Italy, are, depending on the definition, no longer with us, or at least on the in the very last moments of their lives. Yeah. And there are quite a few other airlines where it seems unlike unless they just somehow find the financing that they need relatively fast, they are in danger of going out of business later this year. But I mean, it's the same in different parts of the world. When we talked about Southeast Asia before, and there we also had a bankruptcy filing last week from Sriwijaya Air, which is still flying, but which now is under bankruptcy protection. So I think everyone is pretty much aware of the fact that airlines are not going to get bailed out again now that the COVID restrictions are gone, and there will be a lot of cleanup now that should have happened during COVID if COVID would not have hit. But counterintuitively, some airlines survived because COVID hit, and then they got bailed out.
Thomas, perhaps you were slightly optimistic when you said airlines will not get bailouts anymore. Maybe you should have said most airlines, because surely ITA will get another bailout.
Yes, but I mean that I think ITA would argue that this was part of the original agreement, that there would be this additional loan that would come later this year.
If things don't go well, come back.
Storyline that I got from them.
Yeah, a very familiar story. I think that leads us on quite nicely to our next slide, courtesy of Sid. Talk to us here, Sid, about what we're seeing. You know, it's all positive, isn't it? Or good airlines generally have had a good summer, but how sustainable really is that?
Yeah, so what we've done here is plotted 2 key metrics that you would look for when looking at airline performance. So you've got the EBIT margin and capital structure, and we've aggregated data for all the airlines for which financial data was available, and plotted a trend line. Bear in mind, Q3 is still preliminary, so that graph might go a bit up or down. Most likely, but generally what we've seen is the airlines that have released financial results, most of them, 65% of them, have reported profit, and you can see that from the graph on the left hand side. It's trending upwards and slowly reaching that pre-pandemic level, so that's a positive. But I mean, if you go back to the previous year, it did dip quite a bit in those winter months. I mean, that's again, last year was different because we still had the pandemic as a very ongoing situation, but winters are traditionally weak anyway. And as we discussed earlier, I mean, this was the first quarter after 2 years where there were no COVID regulations, even in most markets, even in Southeast Asia. So that's kind of been, and you combine that with the capacity and all the things we discussed about yields and fares. Those results reflect the graph reflects that situation. There have been strike impact from disruptions and staffing issues, mainly affecting the LCCs in Europe, and even the regional carriers in the US because of the pilot shortage. And I guess another thing to just point out here is that these are a lot of this is driven by the North American and European airlines. I think the Asian airlines, emerging market airlines in particular, they're still catching up. So one of the big factors has been currency and the strength of the US dollar, which has limited their bottom lines. China, again, the first 3 quarters has been negative. There's been significant losses eroding their net worth, which is a big issue for some of the smaller and tier 2, tier 3 airlines in the country. And I mean, if you look at the graph on the right, again, capital structure, it's also trending downwards, which is positive. All the debt that was accumulated and the losses which had eroded the net worth, that's now slowly coming back. And that's thanks to the strong operating cash flows, profits that airlines have managed to accrue. And they also started repaying some of the debt that they borrowed, so particularly the European airlines.
We heard that from Ryanair this week, didn't we? That was their focus in terms of settling some of that debt.
Yeah, I mean, Ryanair is at the pinnacle of its financial strength, right? It entered the crisis the strongest, and it was expected that they might emerge out of it having that financial strength. So, and that's happening now. So they're on the way to reducing net debt to almost zero. So, and even the big ones, Lufthansa, Air France, that's there we are seeing balance sheets grow. But I guess it keeps coming back to that point about emerging markets or Asia Pacific or the smaller airlines, and if we overlay that with the challenges we are seeing on the macro front, it's probably unclear whether this is sustainable. I mean, Ryanair themselves warned that they'll expect a loss in the second half of their year. So that's realistic, but I think the scale and the extent of those losses will depend on all these fuel macroeconomic situations.
Yeah, all the external factors.
Exactly.
And I think just to build on that, you know, whilst the strengthening US dollar is good news for Americans coming to Europe and traveling elsewhere, this is a real challenge, isn't it, for you know, for airlines elsewhere in the world, and for other economies. And you know, we've seen the ripple of that, haven't we?
Yeah, I mean, it's a big challenge for all non-US airlines, and I mean, it can for Latin American airlines, we've seen FX losses swing massively and almost completely wipe out their entire revenues. So it can vary quite a bit. So any money that they might have generated on an operating level is eroded by what's happening because of currency, and it's a particular issue I mean, if the airlines don't have appropriate hedges or even natural hedges, some airlines are moving to adopting the dollar as their functional currency, so they are protected. But it's a major headwind as we look forward.
Thomas, any thoughts?
Well, I mean, I think another thing that is obviously a major factor in a lot of European markets, not necessarily here in Switzerland, where we're kind of living on some weird island where there is almost no inflation because of currency fluctuations as well. But in most countries, especially in Eastern Europe, you're seeing a lot of inflation as well at the same time as they are being hit by the FX issues that they already have. So you have that coupled with staff wanting higher wages, coupled with purchasing power going down quite massively as a result of inflation. So in many markets, you're kind of triple hit by FX and inflation hitting both costs and demand. So I think that's another curve that overlays the other curves of uncertainty where we don't really know how it's going to play out this winter.
I think the die are really cast though for summer 23 in terms of directionality of travel, particularly outbound from the US is where the strength is going to be to international markets. And you see that in the US carriers and the leisure destinations that they're adding for summer 23 into Europe on a seasonal basis. So, you know, and that's helped in some way, of course, if they get their aircraft deliveries and they've got the right fleet. You know, there are some some potentially really good single aisle, long range neo type routes that could be operated by the US carriers and others next summer that would be really profitable, because you would again be, well matched in supply to demand.
And that's quite interesting, isn't it? Because if you think back to, I know we did a couple of pieces of work back in 2019 and perhaps a little earlier that looked at the balance of domicile carrier from the US to certain markets, one being the Middle East, another being China. And the US carriers were not the dominant operators on these international routes. There were some markets that they were quite clearly in. So I think we could go off, couldn't we, down into a whole tangent. Maybe we'll come back to that on the next webinar to look at how the networks of carriers are being shaped and affected by these operating conditions.
Yeah, absolutely.
Okay, moving on to one of our favourite slides. It's always a popular one, and I say that only in the way that probably an AvGeek could say. The Ishka vulnerability matrix is, I guess, perhaps as close to a prediction as you might get about who are the carriers to watch from a negative perspective, who's at risk essentially. And when we talk about the summer being the good times and the opportunity for carriers to make enough money to see them through the cold days of winter, this is the kind of culmination of that, isn't it, Sid, in terms of what has happened, who's moved up, who's moved down, and who's most at risk this coming winter.
Yeah. This is kind of the end point of our work that we do on the credit profile. So we look at the financials, we look at all the soft factors, the business model, the quality of its fleets, etc., and then come up with this view on financial risk. And then in the past 2 years, government support has been main indicator of credit risk. So we've tried to overlay airlines along those two factors. And throughout the pandemic, we saw many airlines moving from the bottom half of this matrix towards the top, as you can imagine, because conditions were quite tricky for airlines. But positively, there have been movements downwards as well this year, particularly. I think the likes of the Mexican airlines, I think they've had a really positive period, and they've been able to leverage what happened in the Mexican market through Aeromexico's restructuring. And now we're seeing Aeromexico also improve on its numbers. So there's some positives there. We've seen Qatar Airways, for example, taking advantage of the significant boom in demand for air freight. So they've got probably the largest air freight dedicated freight division. So that's helped them a lot. But conversely, we talked about the Chinese airlines, and the extent of the losses which they've suffered, and traffic tends to recover quite quickly, and we've seen that throughout the pandemic in China. But then the stop-start nature of it is it's difficult for any airline to make any money, and ultimately that's impacted the balance sheet. And we've got one example here of Shandong. We've seen the big the big three generating some capital or doing some equity injection, but that's not really flowed down into their subsidiaries or the tier 2 airlines. So that's one thing we are watching as well. But we've got the likes of Ryanair, Southwest, who've maintained their positions throughout the pandemic and now are well positioned to capitalize on it. So it's just a snapshot of some of the airlines we look at, but just reflecting on the challenges. And if you look at the top right-hand corner there, that's full of again Southeast Asian airlines, and because again the pandemic and the nature of restrictions and the slow recovery there has will mean it will take that much more longer to repair their financial positions. So that one will be also a good one to watch out for.
I think we heard Thomas from CH
Well, I mean,
Aviation earlier in the week, didn't we, about the perilous position of some of the Chinese carriers?
yeah, and I mean, Sid already talked about them, but maybe to add to Southeast Asia, I mean, in Southeast Asia, carriers really got literally almost nothing except for moral support from the government. So they got a couple of tax waivers and things like that, but there was really no significant support for any of these carriers. And I mean, you see the same in Indonesia, in Malaysia, in Thailand, where a lot of these carriers essentially had to file for bankruptcy protection. As I said, Sriwijaya was just the last one that had to do that in Indonesia. Garuda and Citylink, its low-cost carrier subsidiary, already went through bankruptcy protection and successfully exited again. I went through bankruptcy, has exited. Nokia is still under bankruptcy protection. So that was pretty much the only way how they could deal with the situation, to essentially just declare the equivalent of Chapter 11, try to restructure that way and get rid of debt and get rid of costs, and that was the only way they could survive. So in a sense, the Southeast Asian carriers that are still around have financed that, or have financed the lack of government support by having all of their creditors lose out massively. And I think if you look at the AirAsia X bankruptcy process, I mean, people really just got, I don't think not even cents on the dollar back out of the entire bankruptcy protection process. So I think that's just a very different way of how the crisis was dealt with than it was dealt with here in Europe or in North America.
And I guess it's hard. It's hard
Thomas,
to
given that you say it's the bankruptcy season, what is your expectation in Europe, for instance, amongst the carriers? Who do you think is the most vulnerable, or are you non-committal?
Sorry, are you asking me?
I mean, I've already mentioned one of them because no, he asked me first, I think, but let's all name one, then we don't make ourselves too vulnerable to upset too many people in the industry. I mean, the one that publicly warned about their status was Flyr in Norway. Then there have been some reports yesterday out of Belgium that Air Belgium would need refinancing later this year to be able to make it through the winter. But there is theoretically a lot of candidates that I think are not in a very good position. One more that comes to mind would be Air Malta, where they are essentially all waiting in Malta to hear what the European Commission has to say on another government bailout that might not be approved. So Air Malta might go the Malev and Cyprus Airways way if they don't get approval from the European Commission. So there's a lot of carriers that are in relatively bad positions right now, and that might be better if they make it through the winter, but the question is how they will make it through the winter.
And I suppose, you know, there's an element, isn't there, that COVID in a bizarre way bought some time for some of these carriers. And, you know, maybe the writing is appearing on the wall. Okay, I'd like to change tack slightly and pick up on something that we were talking about earlier in terms of what we're seeing about, we talked about business and leisure and, you know, what we're seeing about travel behaviour. We got quite a lot of press queries when the US carrier results started coming out at OAG about to what extent we were seeing changes in travel behaviour. And some of those were being driven by questions about whether demand was spreading out across the week, and to what extent that was having an impact on airline schedules. There's a kind of an obvious relationship, isn't there, John, that, you know, if airlines are flying less business time-sensitive business passengers around the place, then schedules necessarily can change. To what extent is that, do you think, driving things versus this is a capacity constraint issue that is, decisions are having to be made about where best to deploy aircraft?
Yeah, there's never one, excuse me, there's never one single factor, is there? I think there is undoubtedly more of that leisure demand around. There is more of that work from home, though if you work for a couple of companies in the US, that's becoming increasingly difficult in the last week and a half.
Well, working is increasingly difficult, isn't it?
Yeah. So I think you've got that. There is that bit more demand, but I also think you've got the fact that there isn't as much capacity around as there was, and airlines are having to work what capacity they do have a bit harder so they can maximise utilisation. So they're actually deploying more capacity into that Saturday and the weekend period. So it sort of stretches it both ways, and of course that means, and from what we're seeing here, you can see the change and that there is more activity on a Saturday. It's more effective use of resources. Whether that's going to be long term or short term, I don't know. I should think when and if the airlines get back to their normal types of capacity production, we'll see proportionately the Saturday becoming slightly less popular than it is now. But that is, where only time is going to tell if that is the case. But it's,
I think that shift is a bit of a function, isn't it, of growth in leisure traffic right now. If you're traveling for a weekend somewhere and you can work flexibly, is the fare better to fly back on a Tuesday than it is on a Monday, and the timings work better and you get a day's work done where you are? I think we're seeing a bit of that, aren't we, in some of these examples?
Corporate flexibility, of course, is good, and working from home has proven to be very successful for many people. But that's where the blurring between corporate travel and leisure travel sort of begins, doesn't it? Are you, when you're going back into the office, is that leisure travel? Or probably it is. But it's going to be interesting to see how it shapes out, not just here in the US, but in other markets as well, I think.
Yeah, I think we extended.
I think there is more.
Go ahead.
Sorry.
No, go ahead.
I think there is probably more of this type of leisure travel that John just mentioned in the US than here in Europe, just because it's a lot easier in the US for someone to work from home in Omaha, but actually work for a company based in California, and you just fly out there every 6 weeks to go and see your colleagues now. And that generated a new type of demand because people started to move elsewhere, but still work in the same company they worked for before. But that type of demand is obviously not as profitable for the airlines because it's planned well in advance, and it's probably relatively long trips, and people are flexible to then fly a day earlier, a day later, and just try to save on airfares. But there's definitely a lot of demand that comes from that didn't exist before. That's more difficult in Europe because you can't just live in Portugal on a UK employment contract.
Oh.
You could during the pandemic, but you can't really in real life.
Tempting as it is, maybe I need to rethink my base. Although it's, I think it might be the same temperature in Scotland today as it is in Portugal. So hey, global warming's not a thing, right? Interesting what you said about Europe, though, given that what we're seeing just in this snapshot example of Iberia at Madrid and Lufthansa at Frankfurt is a shift slightly between 19 and 2022 into the weekends. But to what extent is this being driven by just there being more leisure travelers traveling right now rather than business travel, I guess.
Yeah, I think that's a key factor.
Okay, I'm really conscious of time. We've got 1 minute left, and we have an interesting slide that we wanted to include. We've got a couple more just to go through really quickly. We can't talk about airline finances without acknowledging ancillary revenues. This has become a huge area of focus for carriers, hasn't it? Particularly low-cost carriers who really have embraced ancillary revenues as a growth area, and we don't see, or we don't seem to see, any hampering of that. It's going to be interesting, I guess, isn't it, to watch. I listened to Michael O'Leary's presenting the Ryanair results the other day, and he talked about, you know, in recessionary times, people don't necessarily travel less, but they travel, they're more focused on the budget. I wonder to what extent that mindset potentially, as we see all of those economic headwinds that we're talking about, might impact on ancillary revenue spend as well as spend on travel.
Once we bought the airfare, the ancillaries are exactly that, ancillaries, aren't they? And we don't look at them in the context of adding, I've just spent £10 on a bag, so I'll add that to my airfare. And I think as long as the proposition is right, people will still purchase ancillary elements of the product. And as long as the press continue to tell people that you have to wait an hour to get through security, people will spend £5 to go through fast track and wait 59 minutes to go through security. So, you know, I think we have to accept that for many airlines, you know, they are e-commerce companies, and the seat is only the trap, literally, to get you strapped in to then start selling you all the other things that they would love to offer and give to you over a 2.5-hour journey. And some of them are absolutely phenomenal. You know, when you look at Jet2's ancillary revenue per passenger in 2021, $87. I mean, that's going some. But you know, they have a good brand name and they have a good reputation, and people probably think they're getting value for money from Jet2 for those products.
Although,
I mean, I think that's probably also driven by the fact that they are a mix between an airline and a tour operator, and so quite naturally it's easier for them to sell things that are sold throughout the week, that someone is in the Canary Islands and not just something around their trip itself.
Yeah, I was just going to comment. I think that's interesting because their fare price point is higher than the LCCs. So interesting to see, you know, to see that real distinction. But maybe, as you say, it's a mindset thing about the type of traveler, the type of journey you're taking. You know, in terms of your willingness to spend or otherwise. Let's skip on, because we could spend a lot more time talking about that, but we don't have much more time, unfortunately. In case anyone does have to drop off, you will get a copy of the slides and the audio, so please don't worry if you need to go, if you miss anything. In closing, really, we've heard about these headwinds and the kind of dire situation that various economies and indeed airlines are finding themselves in. There's a whole raft of challenges, isn't there, right now for the winter and for airlines heading into 2023?
Yeah, there are, Deirdre, but you know what? There are always challenges in this industry, and compared to this time last year, you know, there's a slightly brighter light at the end of a tunnel. We know what the challenges are. Airlines have begun to build their reserves up. We touch wood. Look like, you know, we've got to grips with the issues of the pandemic and COVID. Certainly doesn't look like we're going to return to an environment where countries are closing down and denying access to overseas travel through the winter. So, you know, it's broadly a better picture, and I think we can go into 2023 with a better appreciation of some of the challenges, and hopefully the summer of 2023 for the airlines, not for us as travellers buying airfares, could be very good.
Goodness, John, a bit of optimism from you.
Yeah, I was
So-
going to. Can I just qualify that, because there was a comment from Clive here about what do we think about Kenya Airways and South African Airways and a possible link up. The only analogy I can think of is a drowning man clinging on to another drowning man in a hope of saviour.
There you go.
That pretty much
Nicely,
sums it up.
nicely positioned, that optimism. Thomas, any closing thoughts from you on the challenges ahead?
Well, I mean, one of the things that you have on there is the fact that we still have issues with the supply chain and with the aircraft manufacturers actually making it very difficult to predict when aircraft are getting delivered. So you talked about Ryanair a lot earlier today. They obviously said in their financial results that they don't really have 100% clarity on when they will get their MAXes from Boeing, but you have a lot of major carriers that depend on 787 deliveries. And after we talked this morning, I talked to one of the European airlines, where one of the discussion points actually was aircraft deliveries. And I asked them, well, do you know when you get your 787s? And they said, well, we know when we currently assume we will get them, but we don't really know if that's going to stick very long. So I think part of the problem is that there is still a lot of uncertainty around when aircraft will become available, and that's going to remain an issue into 2023 for sure.
Challenging times ahead. And Sid, you can have the last word.
Thank you. Yeah, no, so I think even I would try to end it on a positive note. So definitely what we've seen this year is traffic returning. So the first phase of that recovery from COVID, from the pandemic, that's happening, and that's happening across all regions. So that's a positive. There will be a lag on how financials improve because it needs to be sustained. It needs to be consistent I mean, the extent of losses, again, some of those have been offset by the government support, but it'll take time to improve on that. But even that's happening. But while that's a positive, I think it's also important to acknowledge that there are macro factors which will determine credit risk in the near term. So I think that the big airlines, the big full service carriers in Europe, North America, they are fairly well positioned, but there are challenges in the other markets and across the tier 2, tier 3 airlines.
Cautious optimism for some, and difficult time for others. Okay, I think we'll have to leave it there today. Thank you so much to our guest speakers for coming back for a second bite of the cherry, as it were. Thanks to John, and thanks to all of our listeners for engaging and continuing to come back. And who knows, we might come back for 72, 73 and beyond. Having said that, we will be back. We're planning to be back in December the 14th. If you're registered for the OAG blogs and webinars, you'll get details of that as it comes. We'll undoubtedly be doing a bit of a roundup of the year and seeing how clear our crystal ball is for 2023 and beyond. And I suspect we'll be taking a look at some of the things we talked about earlier in terms of where we're seeing carriers go and how networks are being impacted by market conditions. That's a little trailer. Hopefully we will come back and talk to you about that. Having said all of that, have a great few weeks, and we'll see you all in December. Everybody.
Thanks, Deirdre.
Thank you very much.